Welcome back to The Global Investor, the podcast dedicated to helping you build resilient, globally diversified wealth. I'm your host, Jonathan Smith.
And I'm Ellen Catan, here to break down the complexities of international finance into clear, actionable strategies.
Today, we're tackling what I think is one of the most paralyzing decisions for sophisticated investors, the dollar versus the euro. It often feels like you're forced to choose a winner, but as we'll explore, the real strategy is far more nuanced. Ellen, thanks for joining us.
It's a pleasure, Jonathan. This dilemma, USD or EUR, is definitely where I see a lot of smart investors get stuck. They focus so much on what stock to buy that they forget the fundamental question of what currency they're buying it in. That single choice can often determine whether a good investment turns into a great outcome or a mediocre one.
That's a great point. You frame it beautifully in your work. It's not just an exchange rate choice, it's a strategic foundation. Let's set the stage. Why does this currency decision matter so much today? Why is currency risk management suddenly so critical?
Well, the core context is volatility and global interconnectedness. We live in a world where central bank decisions in Washington or Frankfurt or a geopolitical event in Eastern Europe have an instant, direct impact on your purchasing power. If all your investments are denominated in a single currency, say the dollar, you are essentially a passive spectator. You're letting external forces, inflation, faraway interest rate decisions, dictate the real value of your future wealth.
Right. So you might nail the stock pick but lose 10% because your base currency depreciated against the currency of the asset you bought. That must be frustrating.
Exactly. And that frustration is poor currency risk management. We need to stop thinking of currency as just a conversion tool and start seeing it as an active layer of risk, or better yet, a layer of protection.
Let's dive into the core discussion, starting with the US dollar, the undisputed heavyweight champion. What makes the USD the global reserve currency, and what does that mean for an individual investor?
The US dollar, as you said, is the captain of the financial ship. Its dominance isn't accidental. It's built on extreme liquidity and historical confidence. For the investor, extreme liquidity is the number one advantage.
Meaning you can always buy or sell no matter what?
Precisely. No matter where you are, no matter the time of day, there's always a market ready to accept or exchange dollars. This is crucial because it minimizes the risk of your assets ever becoming frozen or illiquid. But the deeper phenomenon is what we call the flight to quality.